Hi there, welcome back to Dukascopy TV. I'm Ben Jones. Ahead of the US NFP release on Friday, I have Sant Manukyan on the line to analyse the US economy. Sant, once again, thank you for joining us. Now, before we look ahead to the employment data out later this week, we saw a steep drop in consumer confidence yesterday from 92.2 to 86. Not many were predicting something like this, so why has this figure dropped?
Judging by the details, there seems to be a broad-based decline, not only the confidence but also the present situation index, and the expectations declined significantly. Other details were down as well. It would be hard to finger point to a specific issue, but usual suspects could be tightening expectations regarding Fed, FOMC, and the global slowdown as well as the geopolitical problems, I suppose.
As well as employment data on Friday, the US trade balance is released. The figure's been hovering close to the minus 40 billion level for a while now. Is this a comfortable level for the US, or is it something you think they'll aim to improve?
The improvement in the trade data is largely due to oil imports, and I expect a declining import trend in the future coupled with lower prices. However, sometimes in the future, that is according to the J-curve, 6 to 8 months, we should see the stronger dollar effect on the numbers. Strong domestic demand and some weakening export performance would help the figure hover around $40 billion.
Now, the all-important non-farm payrolls and unemployment rate are out on Friday. Can you outline what you're expecting from these releases and how they'll impact the US economy, especially with regards to the interest rate decision?
Actually, that's the toughest and million-dollar question. The labor index buried in the consumer confidence data declined from negative 12.4 to negative 15. So that's not a good sign. For me, it's kind of hard to make a guess without the ISM announcements, but I believe the figure will be north of 200,000. That's the usual expectation. Unless the change in wages is strong, I don't think Fed will dare to make any significant policy change. So no matter if the unemployment rate is below 6.1% or 6%, it will again come to the wage growth, and that's the critical issue at the moment.
So would you say that wage growth is one of the most important factors for the Fed?
Right. Actually, the problem at the moment is they still say there is a problem with the unemployment rate and the participation rate, but the real problem, I suppose, is still the inflation, and inflation expectations are below 2%. So most probably before making a move, they would like to see stronger inflation expectations and some wage pressure. Unless we see it, I don't think they are going to move.
Sant, thank you for sharing your insight with us today. That's all we've got time for. Keep clicking back to Dukascopy TV though, as later in the day, Alex Isaac will be bringing you today's forecasts. Bye for now.